The US dollar is heading for a big finish to the year of 2024 as we take our steps into the year of 2025. Are we going to see that momentum continuing? Guys, Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So the second half of this year has been a strong one for the greenback, largely bouncing back, roaring actually from the bull, stampeding to the north. The large trigger into the upside came obviously with Trump winning the elections in November. And obviously his policies are very much pro-growth, tax cuts, deregulation, pro-crypto, inflationary, which is all stuff that's going to be likely putting the FOMC on the halt, stopping them from further stopping them from further cutting interest rates. Maybe they potentially raise rates. They're stopping them from further cutting, where other major central banks, bear in mind, are cutting rates quite consistently because inflation's slowing down in other major economies, growth is slowing down. But then in the US, the economy's still pretty damn warm. Inflation's still sticky. When you look, we've seen the recent CPI readings, we've seen the recent PPIs. Inflation's still sticky. The labor market's still tight. So, and then allied with Trump when he comes into power it's actually early 2025, late January the 20th is his inauguration. He's going to come in and hit the ground running fast. I said this to you guys before. He's going to be implementing policies. I think he's got about 20 to 25 policies that he was going to be hitting on the first day he comes into office, trying to work on. And some of those will likely be tariffs. Those tariffs he's been threatening China with, tariffs potentially on Canada, Mexico. So a lot of fireworks expected for this month of January. If we take a look at the calendar here, guys, if we focus on dollar for the time being, not a lot of, major economic data. We'll keep an eye on Chicago PMI because it's a secondary tier data, and obviously we haven't got anything major as such this week. That's expected to improve to 42.7. We've got pending home sales. Let's see how pending home sales are doing. Obviously, it's in a quiet period as we head to the end of the year. Expected to drop down to 0.9% from 2%. Obviously, the US economy is warm, so we could potentially see that number outperforming. It's just that we're getting that seasonality impact potentially where people start slowing down with their purchases as we get towards the end of the year, especially big ticket property purchases like houses. That's a big ticket purchase. Then later on in the week, on Thursday, we'll have unemployment claims, which has been good, really. When you look at the run of unemployment claims, still generally steady. Less people claiming unemployment benefits, which is good. Just shows how tight the US labor market is. And then, of course, ISM manufacturing PMI, where for me personally, I don't see that as a massive thing because it's a high impact data, but the US isn't a massive manufacturer. When Trump comes into play, he's going to want to make America a bit of a mark. He's going to make a mark in that goods should be manufactured in the United States as well. Stop relying on China. Let's start producing some goods in the United States. So anyway, that's expected to come out at 48.3. Previous was 48.4. Keep an eye on manufacturing prices. This is, for me, is more important, the actual prices for manufacturers, because if this number comes out higher, what does that mean? That's inflationary, okay? So the number is expected to be higher in comparison to previous 50.3. That would be obviously dollar positive. Now, this outside of all this alone, obviously you can see the strong trend we've been to the upside for the dollar. We've been calling this, right, for the last 1, 2, 3 consecutive months. We've been pushing to the upside, and we've been all over this upside pressure, right? We've had our finger on the pulse for it. We formed a bit of a bottom anyway. Okay, at this psychological 150 mark, we formed a morning star there, validated by that closure above there in the month of October. And as I said to you guys on that previous video, it's a bit of a W structure, a bit of a double bottom, where if we go by the textbook of this, and obviously we've got all the macros supporting this, especially when Trump comes into play, there's no reason as to why, look, we could start moving up to these levels, go and challenge these highs here, and that would be incredible. And I can't see this not happening personally, guys. So you heard it here in this video that the dollar goes and challenges these levels here of 2022 up at this 112 into 114 territory. I believe we're going to be talking about this on our coming videos, guys. Give it a little bit of time first. Obviously, things are going to be a bit light given the we're heading into New Year. So this trading week is going to be quite quiet. Don't expect full volume there. The following week, we're going to expect full volume, which we'll talk about obviously in our next video. But otherwise, this is just a case of working zone to zone for the dollar. I think we should just find some demand here. We've already been sort of knocking on the door after this breakout. But anywhere in this region, we should just bounce and keep buying, work our way into 109, see how we deal with 109. And you know, maybe we can just carry on and, you know, do something like this. But we'll talk about that when we get there. But right now, dips should continue to be bought. Structure is to the north, lower highs, lower low, higher highs, higher lows, as we're sort of structured, as you can see, structured nicely to the upside. So I'm not expecting any change there in terms of the dollar, keeping that momentum to the north. Also expect some volatility this week for the Australian dollar and New Zealand dollar, because we do have Chinese manufacturing PMI. Now, it's important to note this. Why? You guys know this by now. China is Australia and New Zealand's biggest two-way trading partner. China are a large commodity consumer. They consume a lot of commodities. And where are these commodities produced? Australia, okay, large commodity producing economy and exporting economy, and same as New Zealand, okay? So anything good that happens with China is good for Australia and New Zealand. Anything bad that happens with China is bad for Australia and New Zealand, because if China is expanding and we're seeing growth in the economy and things are all happy, then they're going to be spending and doing more business with Australia, doing more business in New Zealand. If they're not in a great place, they're going to be doing less. They're going to be cutting back, and they're not going to be doing as much business with Australia. So it's good when China are in a good place, but China aren't in a good place. That's why we've seen, you know, governments, officials taking big action with these huge stimulus measures, but are they going to be enough? Time will tell. China's suffering at the moment with low prices. We've seen deflation when we look at some certain key inflation metrics. Prices are falling, which is a sign of a slowing down economy. If price keep falling, they're falling for a reason, right? Because people are not spending, economy is contracting, so prices of goods come down and down and down to try and encourage people to spend, try and encourage some stimulation back to businesses, back to the economies. Okay, but that's the situation China in at the moment. So if we take a look here at manufacturing PMI, excuse the coughing, guys, I do have a little bit of a cold, but we power through, baby. Chinese manufacturing PMI expected to remain above that growth territory. Remember, at 50, above 50 is growth territory. Anything below is contraction. So expect to remain steady there. If that does, if we really need to see a number largely out of line, so largely below 50, okay, if we slip into 49 territory, we're going to see some selling of Aussie and NZD. If we see a number above, it should promote a little bit of near-term strength for Australia and New Zealand there once that's released. Now, if we take a look at the Australian dollar, obviously being hit by the stronger dollar, right? Now, structurally, obviously, we've been all over this to the downside. We broke this key running trend line of support, supporting the price back end of October 2023. See, bam, 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 and then eventually breakout retest. Beautiful. Now, on that breakout and retest, price action you saw formed a nice bearish pennant, breakout retest, bam, more selling, broke this key zone here, that psychological 64, breakout retest, bam. And now we've broken a key zone here, 63 towards 62.50. Look left, there's decent demand here, which we've taken out. And now this does look vulnerable. Obviously, we've got to go and challenge these lows here of 2022. Okay, remember, see those highs there on the Dixie? Those were at the highs of 2022 as well. Now we need to go and challenge these lows. If that ends up being broken down, you can see this fast move to the south that we could potentially see those lows during the pandemic back down to here. Now, I wouldn't be surprised if we see something like this with a stronger dollar, and especially if China really starts slowing, well, they are slowing down, but if China run into some trouble, okay, and markets start focusing on this Chinese downturn and the stimulus isn't helping, then there's no reason as to why we couldn't see this again, especially if China would cause a domino impact effect. Other markets, other economies will follow. So we will see something potentially like this. But if we break this down, okay, and it's simply just a case of the stronger dollar with everything that I noted with Trump coming into power, Chinese tariffs, all of that, this can happen again. Okay, this can happen again. Similar sort of thing with NZD. Okay, we're coming up to a big zone here at 5600. See those lows there in October 2022. And there's no reason as to why we couldn't potentially challenge those lows of the pandemic. Not as drastic as AUD, but still more or less quite a big drop down sub 55 in towards sort of 54.60 area. Okay, 54.70, 54.60. So it's a potential possibility as well. So keep an eye on that Chinese manufacturing PMI. It's an important one, as I say, for AUD and NZD. Now, guys, I say things are going to be a little bit light given volumes as we head into the first week of January. It's the new year, so new year trading is going to be closed. People are not going to be back from the festive period, the holidays. Full volumes typically return on the second week of January, so not next week, the week after. And as you saw there, as showed you an insight, it's a lot of data. We'll give in the next video, we'll touch upon some key themes as well outside of the data, some key themes that we're for 2025 to talk about. But otherwise, on the first week of January, the second week of January, we do have non-farms week, so it's a big week indeed. Other than that, having a blessed and amazing week either way, and I'll catch you on the next video.